the other big stock that we need to talk about is Reliance Industry, is India's largest listed company and has fallen over 23% from its highest point, which it reached in July this year. This raises an interesting question. Can RIL be dethroned as India's largest listed firm soon? In fact, Mihika is joining us with more data to try and answer that question. Is there a possibility that Reliance may break its 9-year streak of giving positive returns year on year?
Yeah, there is a possibility that we have two contenders that have done relatively well compared to Reliance. The stock is down 5%. This is regardless of Reliance currently being the largest listed firm on Indian markets as per market capitalization. But it is to be noticed that the stock is down 23% from its life high, which it hit in July, and it could see the longest monthly losing streak since the COVID-19 pandemic hit the market, and we saw a steep fall. And this will happen if the stock doesn't gain 5% before 2024 end, and that leaves us with 4 trading sessions. And then the milestone of having 10 consecutive calendar years of positive returns is at risk. Now, what's been dragging RIL a bunch of factors. First up, their consensus EPS estimates are down 16% when you compare to the start of FY25. They have failed to meet the earnings estimates, consensus earnings estimates over the last 6 quarters. Their O2C, which is their biggest EBITDA contributor, as well as their retail business, continue to see a weak performance, while Geo is the only segment that is doing relatively well. They have seen continuous delay in new energy investments, and they've seen a 1-year delay in many of these segments. And there's been disappointment because of no value unlocking via IPO announcements of various business segments. Now, which stocks could dethrone RIL stock? Well, as per our analysis, it could be 2 stocks. One is India's largest IT company, that is the Tata Consultancy Services, and India's largest bank as per market capitalization, which is HDFC Bank. Now, in terms of TCS, well, their share price is up 10% in 2024. You can see it in the charts here. Reliance has been declining, while TCS and HDFC Bank have been reaching very closely, and now their market capitalization just have short difference of 10 lakhs. Now, when you talk about TCS, the share is up 10% in 2024. The stock is the closest it has been in years to dethroning RIL's top spots in the market, and renewed optimism on global levels bodes well for the Indian IT sector. This includes macroeconomic events like the global rate easing cycle, which is positive for TCS. And when you look at HDFC Bank lastly, well, the share price has crossed a key level of 1,750 in 2024, and this is a level that HDFC Bank had for 3 years struggled to cross, but it's done so in 2024, and it's also set to deliver its 11th consecutive year of gains.
So, Mihika, what is fundamentally ailing RIL? And then the question is that, are these, conditions or issues that can retract and reverse?
Yeah. So when you talk about the O2C segment, it's a very global and macro perspective when it comes to your gross marketing margins and how the demand is playing out. We are seeing improvement with, in certain of the segments, but it's key to see how Q3 performs. When it comes to retail, the overall outlook for the retail business, because of the continuous expansion that has not played well, we've seen multiple, retail stores shut down in 2024 itself. So it depends on how the company navigates its retail strategy going ahead, and how much it gets hurt by emerging quick commerce segments. In terms of Geo, well, everything's looking good as of now. The company has seen price hikes. It just took one recently in the last few days. So there are factors that could reverse, but it'll be key to see the second half of FY25, because something that could drive in terms of optimism for the stock is some kind of real life announcement and real life commencement of production in their new energy segment.